welcome to my channel where I discuss stocks that are interesting. So if you find that interesting, then please consider liking this video and subscribing to the channel so you see more of it. Today, we've got a very exciting topic, a viewer suggested topic. Shout out to Public Cake 20 hours ago who commented on my video about Lam Research here, asking, could you do a comparison to applied materials? Of course, applied materials is one of the companies that I reference as being similar to Lam Research. So I'm going to do that. Now, as I mentioned in the Lam Research video, is that semiconductors and semiconductor knowledge is not exactly my core competency. However, I know enough to be dangerous. So I have prepared a report with the help of artificial intelligence, as is on brand for a semiconductor stock anymore. I have prepared a report that I will discuss somewhat. I won't be doing a applied materials centric video, but instead comparing it to Lam Research. So if you haven't watched my video about Lam Research, then I urge you to do so. But we'll go ahead and get started. So if you are familiar with Lam Research, like I described before, Lam Research and Applied Materials are semiconductor equipment manufacturers. They create products that they sell to semiconductor foundries, such as Taiwan Semiconductor and the like. They provide the inputs to the manufacturing process that allow the foundries and the chip designers, such as Broadcom, NVIDIA, and the like, to create sophisticated products. The value proposition at this point in the cycle is that you have the AI semiconductor build out super cycle, I'll call it, that is driving a lot of capex to be created. Now, when we have a data center being built, a multi-billion-dollar data center, of course, what that consists of is real estate and the end chips that end up going into that facility. So a company like NVIDIA, of course, is making a bunch of sales. NVIDIA is outsourcing a lot of their manufacturing to Taiwan Semiconductor, for example. Well, Taiwan Semiconductor is purchasing equipment from Lam Research, from Applied Materials and the like to create their foundry. So you can imagine, as the complexity of semiconductor manufacturing increases over time and the capacity increases over time and the simple demand of it extends out into the future, you can imagine how that leads to more and more of what we would call installed base units for companies like Applied Materials and Lam Research. However, they aren't going to be seeing the huge boom, the boom and bust of the chip designers, who are actually, selling the chips themselves as, intellectual property or core products. Those companies are arguably more cyclical than these companies are, as these companies are selling the equipment to build them and then also servicing those installed equipment units. So that all makes sense to me. This is the part where I needed to rely on deep research here to help me out. Applied Materials, if you're not aware, is the largest semiconductor equipment vendor, whereas Lam Research might be, the third or fourth largest. And Lam Research is the has the leading market share in etching equipment, whereas Applied Materials is a little bit more generalized than that. They provide equipment in almost every major process step except lithography. Now, if you're aware, lithography is dominated by, oh my gosh, I'm totally brain farting right now. The Dutch company, ASML, is the company that dominates lithography. Okay. So ASML is a lot like Lam Research in that they dominate a specific niche, whereas Applied Materials, they have more of a broad focus. And in doing so, they're able to sell more end to end solutions to a foundry. This broad scope makes AMAT a materials engineering solutions provider with end to end capabilities across front end wafer processing, even some back end and display processes. So, more specifically, the core focus areas of Applied Materials are deposition, etching, chemical mechanical planarization, polishers, and ion implantation tools. Got to be honest with you, folks. Like I said, not a semiconductor expert. A lot of that goes over my head. Just know that for every chip, there's multiple processes that are applied to a chip. Again, this is somewhat common sense in the fact that you see you see Jensen Huang at the NVIDIA conference, and he holds up, the big chipboard that they have. You can imagine first off, there's a lot of different components attached to that chipboard. And there's a lot of different, very specialized and niche in scope processes that are required to manufacture that entire chipboard, right? So whether all of that can be accomplished in one place or not, that's not what the video is about. However, for each component in the chipboard, there might be a specific piece of equipment that can take raw materials and etch away the information pathway into that particular piece of hardware. So I'm not going to go into how the technology works because that's not my strong suit. Just know that Applied Materials is a larger company and has the dominant market share in deposition equipment, saying 30% market share here, according to this source. And then in a couple other categories, Applied and Lam compete with each other. You see here, Applied leads in certain dielectric and metal CVD processes, while Lam, via this Novellus heritage, or Novellus was a company they acquired, leads in others like gap fill and some ALD applications. So I urge you to do more research about these things to see for yourself and get comfortable. But deposition, Applied Materials has the dominant market share there. Etching, Lam is the market leader with 45% of the etching. And then you have, some of these. Clearly, there's a lot of different processes involved with semiconductors: cleaning, chemical mechanical planarization, which supposedly Applied Materials has leading market share. Interestingly, Lam Research does not compete in CMP. And then we also have implant doping, meteorology, and inspection. Here, KLA Corp and ASML dominate that. There are some products, but not much market share there. So, to sum it up, Applied Materials technology leadership is strong in deposition. And then these are kind of subcategories of deposition, whereas Lam Research is etching. So, both companies, in theory, are correlated to the semiconductor manufacturing upcycle that occurs, however, so often new complex technologies in semiconductors are introduced. So they're susceptible to the same kind of megatrends. However, given that they are each dominant in respectively different areas of the semiconductor manufacturing process. There is some slight differentiation in their business. However, very similar business models. If I scroll down here, one thing that the report discusses is that both companies, and this is something that I highlighted in my video about Lam, both companies have large installed bases and service organizations. So, Applied Materials service business, in other words, recurring revenues that come off of the servicing of the installed equipment. They don't just provide repair on the equipment, but also services such as analytics and process optimization. So, what that sounds like to me is they're using software technology, maybe even artificial intelligence, to optimize yield of the equipment. In other words, the productivity of a machine engaged in the manufacturing process. So, in other words, both of these companies do have a recurring in nature customer support business that is a little bit more acyclical compared to the equipment business of each. I think the last thing we'll look at in this report, at least for now, is just in terms of financials. So, Applied Materials is slightly larger, really 50% larger in terms of revenue, which seems reasonable given that it has more end markets. As such, it goes without saying that their customer base is also slightly more diversified. Oh, and also, one thing I highlighted was that Lam Research spends, about 12%, low mid teens digit percent on R&D. Applied Materials also does so. So here we see Applied Materials here has actually underperformed the market. I'll do a comparison here in a moment. Down approximately 4.72% year to date. I'm going to add Lam Research here. We see that Lam has actually been a little bit more volatile over the last year period. Lam Research has actually performed quite strongly year to date. Both the S&P and Applied Materials have been down, whereas Lam has produced fairly strong returns. In fact, one thing that I did in my prior video, I pulled out a comparison of these stocks to demonstrate that the valuation of Lam Research was better, at least on a price earnings ratio basis, better than KLA Corp and ASML. However, Applied Materials was had the lowest valuation. Well, one thing that I wanted to show you here is that both Applied Materials and ASML have underperformed the S&P year to date, where Lam Research and KLA Corp have strongly outperformed. So you can see here that these stocks have a high degree of correlation. They move in the same direction on a particular day, and that pattern is very demonstrative. However, for whatever reason, Lam Research and KLA Corp have strongly outperformed the bunch year to date. And we see that pattern more or less holds true over the last year. However, out of the pack, KLA Corp is the only company with a positive return over the last year. So KLA has been the strongest performer, followed by Lam Research. And then Applied Materials actually has been the worst performer of the companies. I'm actually going to get rid of the S&P 500 here. Let's just take a look at some of these metrics. I'm taking a look at gross margins. What we see here is that Applied Materials and Lam Research have sub 50% margins, whereas ASML and KLA Corp have the best by far. But really, no discernible pattern there that would belie why Applied Materials may have underperformed. If instead we look at revenues, we do see elements of cyclicality here. And we see that out of all of these companies, Applied Materials has the largest revenue. And I will say this doesn't seem right. I guess I would have assumed that ASML, maybe that's the ticker we need to be looking at. We were looking at the OTC ticker for ASML. So taking a look at this, we see that in terms of revenue, KLA Corp, more of a niche player, Lam Research falling behind. Applied Materials has more than 50% more revenue compared to Lam Research. Interestingly, over the last year, Applied Materials has actually had more stable revenue, whereas Lam Research has been a little more cyclical, which I find fascinating. I think another thing that we should probably look at, let's just look at EBITDA for a second. I assume that this is GAAP EBITDA and not adjusted EBITDA, but I'm not entirely sure. So what we see here, kind of the same story. Applied Materials is relatively flat. It looks like we've increased our EBITDA by about 2%. Not great over the last 2 years. Lam Research were slightly down. KLA Corp were up, but also volatile. ASML also very volatile in terms of EBITDA. But all companies here in a very strong uptrend. You see Lam Research here, EBITDA has increased by from 1 billion to over 5 billion. Applied Materials from 2 billion to 8.5 billion. ASML 2 billion to over 10 billion. KLA Corp 710 million to 4.5 billion. So all of these companies demonstrating very, very strong growth. You do see here, again, this is over a 10-year time frame. You see here how these companies are cyclical, but in a strong uptrend. So Applied Materials, I would expect, given that they have more breadth to their product portfolio, I would expect less volatile cash flows than a company like Lam Research or KLA Corp, that, to my knowledge, is more specialized and niche to one particular segment of the market. These numbers somewhat indicate that, at least over the last 3 years. However, not super conclusive. So let's take a look at dividends per share. All of these companies pay a dividend. You see that the ASML number is a little over the place, and ASML again is not a US based company where the other three are. So that's why you see some volatility there in the dividend per share because of currency conversion. What I see here, Applied Materials in 2015 had 40 cents, now $1.60. That's pretty good. That's 4x. Lam Research, 7 cents to 86 cents. That's more than a 10x. KLA Corp going from $2-ish there, $1.95. So a 300%. ASML, also about an 8x. Very, very strong dividend growth from all of these companies. This is turning into more of a broad comparison than the viewer requested. So maybe I'll scale it back a little bit. You see here pretty similar trends, although the magnitude, it's hard to tell by this graph, but the magnitude to which Lam Research has increased their dividend significantly higher than Applied Materials. These numbers are sometimes not great looking, the revenue growth year over year number, but at least we see some consistency in the cyclicality. So it's when we're talking about the financial performance of Lam Research versus Applied Materials, you see that there really isn't a whole lot of difference. I mean, you see the cyclicality in these numbers. I wouldn't say that there's a material difference between the cyclicality of those companies, assuming that those metrics are correct. Let's look at the price return of these companies. We see over 10 years, this is just price return, not including dividends. Lam has significantly outperformed Applied Materials over 10 years. It has outperformed over 30 years as well. So zooming in, Lam Research has significantly outperformed even in recent times. Really, in almost every time frame I look at here, Lam Research has outperformed Applied Materials. Can I give you a good reason for that? No, I can't off the top of my head because it's unclear what might be driving that. However, what I will say is that personally, I have shares of Lam Research. I do not have shares of Applied Materials at this time. And I prefer Lam Research because it's demonstrated relative outperformance. I can't honestly explain what the difference is, and that might have something to do with a level of technical sophistication that escapes me. However, I like to, when it comes to shorter time frames at least, trust that the market isn't perfectly efficient. I think we all know that. But when two stocks are highly correlated, you're getting the same or similar correlation versus the index by investing in either of these companies. So when I'm looking at one versus the other and I'm seeing one outperforming the other, I tend to prefer the one that is outperforming. If I apply this concept to other companies that are in a similar space and therefore have a similar correlation, I'll give you two examples here. One thing I will do is I will look at MasterCard and Visa. We do see, well, Visa's outperformed year to date, but I'm even surprised by that. Over the last year, Visa's outperformed MasterCard. Visa's really outperformed. When I started investing in these companies, MasterCard was a much more prevalent winner. You see here over longer time frames, MasterCard has significantly outperformed Visa. I won't go into the reasons why. However, I will say when it comes to the two stocks, I have invested more capital in MasterCard over Visa, although strong allocations in both, knowing that they have almost identical performance in the short run. Another example of this that I'll give is Pepsi and Hershey. You see here, if you zoom out a little bit, very similar performance, right? But what do you notice about Hershey being the purple? It's a little more volatile in either direction. A little more volatile. It went up higher here, it goes down more here. So as of right now, as of this period here, Hershey, yeah, you see here kind of pronouncing what I'm saying. Hershey is, these two stocks are highly correlated to one another. However, Hershey tends to underperform when times are bad, outperform when times are good for these respective correlations. You see here, Hershey is outperformed in price return alone, 2-1 on Pepsi, and done better year to date. So all of these stocks that I'm showing you, I have positions in. When it comes down to this, my position in Hershey is larger than Pepsi for this exact reason. I expect it to outperform with similar correlation. So there's some diversification there, but it is a concentrated bet as well. The last example I'll give is Republic Services and Waste Management. You see here, and this is actually kind of a very strong demonstration of this concept. You see the price action of these stocks. Almost, it looks almost identical. The only thing that's different is we have one stock significantly outperforming the other. And why is that? Well, just as MasterCard is smaller than Visa, Republic Services is smaller than Waste Management. this companies exist in an duopolistic, somewhat duopolistic market structure, and therefore should have similar rates of growth. Any outperformance of RSG versus waste management is likely to be due that it is smaller and growing slightly quicker. At least it has been. So if you like one of these stocks, you in theory should like the other one, right? However, it might make sense to overweight to the one that has outperformed as of late. And that's my exact logic on that. So, again, if we take that back and go back to our companies here, again, you see there that on a given day, both of these companies are probably going to have the same color and close magnitudes to each other on a given day. So they are positively correlated, and one just might happen to have a higher beta than the other. And we see here that Lam Research, in theory, has had a higher beta. Again, I'm not doing the actual math. I'm not concerned with that. But if you understand beta, you understand what I'm talking about, hopefully. There is to discuss. As of right now, given the relative underperformance of Applied Materials, now might be a time to take a look and consider starting a position. I still prefer Lam Research for several of the reasons I just mentioned. However, if you like that company, then this one might appeal to you as well. And it's headquartered very close to Lam as well. Similar rates of growth, similar market dynamics, similar presence, and very, very strong dividend growth. So that's going to conclude our video today. Hopefully you found this interesting. I've certainly enjoyed showing it to you. And again, I want to give a shout out to our friend and viewer, Public Cake. Thank you for watching, and thank you for engaging in our video. I've never really done one of these comparison videos before, so I might be missing something. If I am, just let me know. This, like Lam Research, has been in a clear downtrend here. We're getting towards the lower bound here of this very, very rough. I would hesitate to call this a trend line. This is more of the trend here, which we broke out of. Okay. But if you're willing to assume that this is a trend, you see here how strong volume is on the current candle. See this volume here on the bottom? That's in the top quantile there, surely of volume seen over the last 3 years. This does appear to be a tantalizing entry point or near a tantalizing entry point. However, I would urge investors to really consider the fact that this was more of that immediate term trend line, which you see here, we've failed below and failed support. And now we're kind of heading down. So what I would expect here is that there might be further volatility before it gets better. And I think if we compare what we're seeing to Lam Research, I think the Lam Research chart looks objectively better, because while we are seeing similar market dynamics or similar chart dynamics, this chart looks more bullish and stronger. This stock has just been stronger in holding this level of consolidation here. Very similar looking to the other chart. I mean, you could even take it one step further and say, here's our downtrend, right? And we've broken out of that. And now we're in this new kind of ascending wedge channel. I would accept that thesis. I think that Applied Materials chart looks kind of ugly, if I'm being honest. And this Lam Research chart doesn't look great, but it does look better. In my video of this stock here of Lam, I rated it a buy. I haven't done my deep dive in this stock But maybe I will soon. But I'll let my viewers read between the lines. You found this interesting, and again, really appreciate the suggestion. Hopefully, this has been interesting and instructive, and I hope to hear more feedback from my viewers soon. And I will see you tomorrow because it is Monday and we have a whole week of content to knock out. So, thank you, everyone. It's been a pleasure, and I'll talk to you soon.